What's up, guys? Welcome back to yet another video. Today is going to be a quick video about the portfolio performance, talking about some stocks that are dragging our portfolio higher, and just a little touch of what's going on in the economy and stuff like that. So let's get right into it. Portfolio, look at this, guys. Take a look at this. Let's go to the year-to-date chart. We're up 19.06%. Amazing. And actually, if you compare it to when we first started, January 25th, to the SP 500 and QQQ, we are slightly, keyword slightly, outperforming it. So that's amazing. That's awesome. I believe we will continue to outperform it for the rest of the year. Now, obviously, since I'm more concentrated in individual companies rather than an ETF, I'm going to take a bigger hit to my portfolio if the market takes a downturn versus the SP 500. So my portfolio is definitely more volatile, but it's okay, and that's why we get these outperformances whenever the market goes up. So we've had a lot going on in the market and just overall United States, to be frank. We've had several hurricanes. We've had a strike at the ports. So I honestly thought that was going to have a huge impact on the economy. I thought we were not going to a recession, but I was expecting to see maybe half of what COVID was, where basically you go to the store, toilet paper sold out. My dad went to Sam's Club, which is like a Costco, and toilet paper was sold out. Water bottles were selling out. Everybody's freaking out. So I'm like, oh man, maybe this is gonna, maybe we're gonna get a big hit. Maybe we'll get a big dip. And as you guys know, I always anticipate a big dip. I always want a big dip so I can buy more shares. So yeah, we've had that. Of course, the election fees and whatnot. I got the white shirt on. For the portfolio all-time highs, you gotta dress up nice. I mean, come on, we're celebrating, guys. Let's go. 26K portfolio, hopefully 30K soon in the next 3 to 4 months. Depends on if the market continues to rally or takes a turn for the south. So I mean, either way is fine. But what stocks have been driving up our portfolio performance? It's Meta, CrowdStrike, Nvidia. I mean, like I said, the market's been ticking up, but really these companies have been on a run. Okay, so let's take a look at Meta right here. Our biggest single company position. It's at almost $600 a share, guys. 600. That's insane. Our average cost is 476. And to be honest, guys, it's not even that expensive. If you look at the P ratio, I believe it's around 27, the 4P ratio. It's not that expensive. I actually think it's approaching a fair valuation. I think between 580 and 620 is a fair price. So, and it pays a dividend. On top of all this growth, we're getting a dividend. It's amazing. So, next up, CrowdStrike. Expensive stock, but well-deserved. Not as expensive as Palantir. Gosh, man. I want Palantir. I'm just salty about Palantir because I didn't buy more, but it's whatever. Almost at $300 a share. I believe, CrowdStrike's fair valuation's around 275, 300. I wouldn't be scared to buy some here. It's an animal. I'm gonna touch on CrowdStrike a little bit more later, but and Nvidia's been creeping up. Not rocket ship, but hold on, not Microsoft. Only red. Look at our portfolio, man. Hold on. I don't know how I can try to zoom out, but basically just green across the board today. Besides Microsoft, let's look at Nvidia. Nvidia's year-to-date chart. So as you guys see, it's been creeping up. And I wouldn't be surprised to see another leg up here when it comes to next earnings. I think next earnings report, we're going to get those billions of dollars from Blackwell revenue. And I believe that this stock is going to go absolutely insane. Now, one thing I do think is going to happen in the next, I'll say 1 to 2 years. I could be completely wrong. This is just me thinking out loud. I think CEO Jensen Huang is going to step down. I mean, he's done a phenomenal job, but he's getting older. He was selling a bunch of stock. It makes sense. I mean, he's getting older. How long is he? How old is Jensen Huang? In his 60s? So, I don't know. We'll see. I mean, look at Warren Buffett. Maybe he'll stay, forever, but that's completely just a wild guess. But yeah, we've been getting some insane returns recently, guys. It's been amazing. And the stock market, it should be boring. You know what I mean? It should be, add a certain amount each week or month, buy the companies you believe in or buy an ETF, and you just wait. It's a long game. Like I said, the market really boomed today after the job report came in super, super strong. Unemployment declined. Just signaled, great strength in the economy because we've had so much fear about, the economy slowing down. The Fed cut 50 basis points because the economy is in horrible shape. So this is a really, really positive sign for the markets, and this is why we get this big bump today. And is the market expensive right now? And what am I buying? Uh, the market isn't cheap, guys. It isn't cheap. Is it expensive? It's not cheap. So, but the fact is, whether the market's cheap, whether the market's expensive, there's always companies to buy. There's always a bull market somewhere. I forgot who said that quote, but there's always a bull market somewhere. But the stocks I'm buying right now is Microsoft, Amazon, and CrowdStrike. I think all of these are fairly priced. They're just all solid companies that are going nowhere but up. Their revenue growth, their potential is just insane. I think Amazon is undervalued. CrowdStrike is the most expensive on the list, but like I said here, when you consider their growth and the fact that it's recurring revenue, the best kind of revenue, it's a no-brainer long-term hold. 5 years from now, CrowdStrike, my phone's blowing up right now. 5 years from now, all these companies are going to be worth so much more. And of course, they're going to trade at a higher, 4P ratio because their growth is much larger than these other companies. But it's the same thing for Shopify. Shopify is an expensive stock as well, but it has great growth. God, my phone, man. I got to turn my ringer off. Hold on, guys. It's so late right now. I don't even want to tell you guys how late it is. But it's just a growth beast. These companies are growing strong. And Palantir is also growing strong. It's growing super, super fast, around 30%, I think, 25, 30%. Insane. But Palantir's 4PE is around like 110 or 100. Like, it's just ridiculous. And, it's a great company, a great long-term potential, but I can get CrowdStrike at a PE around, I think, between 65 and 75, if I'm not mistaken. Same with Shopify. I could be wrong there, but it's around those levels. It's just expensive, man. So I think what would be perfect in my opinion, I think if Palantir, just barely misses earnings or revenues or whatever, the stock's going to tank because it's pricing in perfection. And I hope it does. I hope it misses by a little bit, and then the stock goes down to $30 a share. I'd be buying like crazy. It's at $40 a share right now. Let's look. Yeah, hit $40 up here, up 2% for the day, pretty much. So yeah, just an expensive stock. Google is not an expensive stock. Trading at a 4 PE less than SP 500. You can get Google at a cheaper valuation than the S&P 500. That's insane. It's a solid buy right now. It's a screaming buy. But honestly, I'm happy with the size of my position. I wouldn't be scared to get up to 25 shares, but right now I'm just, I'm not, freaking out. Really just chilling and focusing on, my portfolio as a whole. I've been buying a lot of Google recently, so just laying off the gas a little bit. But that's really it, guys. Thank you guys for watching. If you guys got any questions or something to talk about, or if you want to talk about some stock in the comment, let me know. I love having conversations like that. I love finding out about new stocks and great companies with long-term potential. So you guys have a great night, and I will see you guys in the next video.